watching a fresh and new edition of Market Masterclass on Money9. I'm Sakshi Batra. Well, joining me is a very special guest today, Mr. Ankit Agarwal, who's the Fund Manager Equity at UTI AMC, joins in to share insights on how the markets are going to move from here on. Thank you very much for joining in, sir. I wish to begin by understanding from you, how are you looking at the markets right now, which is, right now in the midst of the second wave, which is giving signs of picking out. But now there is a talk of the inevitable third wave as well. So, how are the markets really pricing in all of this?
Yeah, clearly. I mean, I think the markets have seen a significant move over the last 3 months, and our sense is that valuations have sort of moved in a slightly expensive zone, closer to 1+ standard deviation of their longer-term averages, and therefore they are pricing in a significant recovery coming in the next couple of years. So the valuations do look a little bit on the expensive side, especially on a near-term basis.
Okay. Also, I wish to just take a broad view on the mutual fund foreclose as well, and then we can go deeper into the markets and the ways they can move ahead. We have seen that two consecutive months of positive flows have been seen, especially in equity mutual funds. Would you, looking at this, say that the long-term structural growth story of the mutual fund industry is very much intact, or could this second wave and the impact that it could have on the economic recovery? There is talk of a delayed recovery now, and this current lockdown, which has been extended for about 3 to 4 weeks for most of the states and the cities as well. How is this going to really play out in terms of people's, interest in equity mutual funds and SIPs, redemptions? How do you see all of that?
Well, I think from a longer-term structural perspective, we do believe that there is a continued play of financialization of savings. I think more and more people are finding equities as a viable sort of an alternative, especially in a scenario where some of the other asset classes may not be delivering the kind of returns that they might have seen in the past. And therefore, if one has a sort of a slightly longer-term view, you are seeing equities providing them sort of real returns in the longer term. Therefore, on a sort of a longer-term basis, we do believe there is a continued case for flows coming into equities, and for that matter into the mutual fund asset class. In the near term, maybe there could be some disruptions because of maybe near-term uncertainties with respect to earnings. Obviously a lot of people would be seeing a lot of outflows in terms of their healthcare expenditure going up, or
Yes.
for that matter, some of the earnings coming down, or their salaries coming down. But I think that's more sort of short term in nature. I think from a longer term perspective, we do believe there is continued case for more and more financialization of savings, and hence more flows into mutual funds.
Okay, talking about the near term also now, which sectors do you think that will lead the recovery from COVID-19 pandemic? And also, in addition, how are you looking at the COVID battered sectors, for example, those hospitality stocks, the aviation sectors, the entertainment multiplex stocks, and all of these baskets? How much more pain is there for them? And if they are at an attractive valuation at the current time, should one really look at the long term perspective and think of adding them, in your perspective?
Yes, clearly. I mean, so some of the sectors specifically in travel, retail, leisure. I think some of those sectors which have been sort of hit most in this pandemic, the first and the second wave. I think those ones will be the ones to see a significant recovery. If there is sort of a post-COVID recovery, maybe 6 months down the line. Contingent on maybe vaccine penetration going up. So those are some of the sectors one could look at. And there clearly one has to sort of bet on some of the leaders in those space, which have reasonably well managed balance sheets, which can sort of survive this current storm that they're going through. And if they are able to survive, what you would see is that some of the weaker, smaller players will go out of the market. Some of the smaller, unorganized player will not be able to survive, and therefore the ones who will be able to survive this particular pandemic will emerge much stronger. When will that happen? That is the basic question. It may, you don't know what will be. Will there be a third wave coming in? What will be the ability of people to sort of go back into some of these multiplexes, restaurants. So I think that is something that one would have to grapple with. But clearly, somewhere down the line, some of these sectors will emerge stronger. So as long as you have slightly longer term view, maybe a 2 year or 3 year view, there is definitely opportunity in some of these sectors. Where you're betting on market leaders, well managed balance sheets. I think those will be the places to sort of look for opportunities.
Okay, since your focus area is the mid caps and small caps, I have to ask you for UTI AMC, how have the funds performed in these two baskets, the mid cap and the small cap funds, with respect to peers and maybe even benchmarks in the last 1 year or last few years? And what's the outlook there?
Yeah, so I mean, if I look at my portfolio construct, it's fairly well balanced. So you have 60 to 70% of the portfolio invested in structural opportunities, long-term plays, good quality, businesses run by great managements, and 30 to 40% of the portfolio would be in sort of more value-driven opportunities, which benefit from any cyclical recovery that you might see in some of the sectors. So I think, if I divide the COVID, post-COVID recovery in the first phase where you sort of saw a significant decline, and the part of the portfolio which was a little bit more focused on more long-term opportunities, that part of the portfolio did really well. Once the recovery played out, the recovery of the value-driven sort of portfolio that sort of participated. So I think in the last 1 year basis, our portfolios have been in the quartile one, quartile two of peer performance. And our sense is that as long as you're disciplined in your approach to investing, have this sort of a construct, there will be different phases in the market, where a certain portfolio construct will do better. But I think in the long term, this strategy works well, and that 60-70% of the portfolio gives you long sort of compounding returns, and that 30% of your portfolio will give you that added alpha as and when recovery plays out in some of those opportunities.
Now that we have been talking about the broader markets, I also wanted to ask you that, a lot of experts are also somehow drawing a comparison of the kind of rally that we are seeing in this space, say, with 2017, 2018 kind of moves that we had seen. While we had seen euphoric moves in mid and small cap stocks during that time, the end game was not that great. How is it going to be different this time around? Is it going to be like all out outperformance this time from this broader market space? And now that some of these indices, BSE small cap, or Nifty mid cap 100, they are at their lifetime highs. Would you say there is perhaps time to even looking, to book profits in these places?
No, so if I look at the period from 2013 to 17, that period was characterized by 3-4 years of consistent outperformance of the mid and small cap indices over their larger cap peers, and then we saw out of 2017 to maybe 19 towards 2020 a period where the large cap significantly outperformed. And now, we have seen 1 year of sort of a pullback where mid and small caps have outperformed the larger cap peers. But if you look at these indices uh, from a 3 year, 5 year perspective, 3 year returns will still be in single digit, return from a CAGR perspective. And our sense is that as long as interest rates remain benign, you do see some of the broader recovery in the market, and coupled with some of the well-managed companies, taking away market share, I think there is still scope for outperformance of mid and small cap indices over their larger cap peers, and
Okay.
therefore to pull that 3 year, 5 year performance to levels which we saw during the 2006-17 period. So I think there is still a long way to go for small caps to sort of catch up with their larger cap peers in the longer term performance.
Okay, just last question before I let you go, and that is on what you really hinted out. I'm taking a cue from that. Help us understand, help the viewers understand now that the markets, especially the benchmarks, they are actually hovering there near their all-time highs. There is a question about the kind of valuations that they command right now. But despite all of this, in case we are looking at the economy, even in the long term, to revive from this kind of a pandemic and the demand hit and all of those things, which sectors are going to really create alpha for investors, and how should they position their money now?
Yeah, so I mean, I think so. While we do have a fairly bottom-up approach to investing, if you look at the portfolio construct today, I think some of the areas we do believe that there is still long-term tailwinds. I think clearly consumer discretionary is one space where we believe there is a long-term money to be made. Clearly, manufacturing is one space where, and when I say manufacturing, I'm also including sectors like chemicals and API manufacturing, where there is a clear case of China plus one sort of strategy playing out in the longer term. I think some of the ancillary beneficiaries from PLI at the margin will also stand to benefit in the medium to sort of long term. Some of the areas, especially in the healthcare space, what we have seen in the last 1-2 years, I don't think this will be the end of healthcare spending. I think healthcare and healthcare services is one space again where we do believe there is a lot of scope for long-term structural growth. So I think those are some of the sectors and some of the cyclical sectors, specifically in the auto space, where we have seen last 2-3 years of significant decline. There is a possibility of a lot of pent-up demand coming back, both in the auto and the CV space going ahead. So I think from a cyclical perspective, though, that is one area where we do believe there is a lot of scope for growth. So I think those are the
Okay.
sectors where we believe that not only from a longer term perspective, but if the recovery plays out, there is a play over there.
Okay, thank you very much, Mr. Agarwal, for sharing your time with us and your views on the markets, the outlook on the markets, and how the broader market space is going to outperform in the long term. The long-term outlook still looks fairly positive for the markets, and we are going to come out of this pandemic with a whole lot of positive returns in the portfolios and long-term sustainability in mutual fund flows as well, going on from here, from the second wave as and when we emerge. Thank you very much for sharing these insights with us. It's a pleasure to have you with us on Money 9. Okay, with that, we wrap up this edition of Market Masterclass for you, but a whole lot is awaited right on the other side on markets and on personal finance front as well. So don't go anywhere and stay logged on to money9.com.